This is Process Costing Part 2, where we will look at how to record the costs incurred in process costing within T accounts and to calculate the cost per unit. So here we have an example of a T account. On the debit side of the T account, we record the material cost, the labour cost, and the overhead cost. If in the process there is an abnormal gain, that is also recorded on the debit side of the account. If we look at the credit side, we record our output, the normal loss, and any abnormal loss. You will notice also that this process account is unusual to the T accounts you are familiar with because we have two columns. One is for the values and the other is for the quantities. And these quantities will be the quantities that you have put into your physical flow that we looked at in an earlier recording. This particular T account shows kilos, but it could be units, it could be litres, it could be any other measurement. But you will see two columns, quantity and values. So we're going to look at how we write up this T account. So here we have an example. So we input into the process 1,000 kilos. Our normal loss is 10% of the input. Our process costs, so that's in this example is the material costs, are £10,000. Our labour and overheads, £5,020. Actual losses, £880. And those losses can be sold at £8 a kilo. So this is our scrap value. First thing to do is to think about the quantities. So we need our physical flow. So our input is 1,000, normal loss is 10%, our actual output 880. So if we look at putting those figures into the physical flow. Right, so our input 1,000 kilos. Now, if you remember, I said the next thing that you should record in your physical flow is the normal loss. So that is the expected loss, which we were told was 10% of our input. So we can put that in. 10% of 1,000 is 100. We were also told what our output was. It was 880 kilos. So does it add up? 1,000 kilos went in. So far we know that there were 880 kilos output and 100 kilos normal loss. So that's 980. So we're 20 kilos missing. So therefore, in addition to our expected loss, so our normal loss, we must have lost a further 20 kilos. So we've got an abnormal loss. And now it all adds up to 1,000 kilos. So most important that you do your physical flow first. These quantities will be transferred into the quantity columns in the T account. Now we need to think about putting some values to the output, to the normal loss and to the abnormal loss. As was mentioned on the last recording, normal loss has two possible valuations. So just a reminder, normal loss, either put 0 valuation to it, or if we're given a scrap value, you value it at the scrap value. Those are the only two valuations for your normal loss. Now if we just go back to our example, we were told that our losses could be sold at £8. So therefore our normal loss in this example, 100 kilos at £8, £800. For our output, which was 880 kilos, and our abnormal loss, which was 20 kilos, we need to put a value using this formulae. So our process costs are the costs of the material, labour and overheads that go into the process. Okay, so that's these costs here. Material, labour and overheads. So we've got 15020. Take away the scrap value of our normal loss, which we've just worked out to be £800, and divide it by our expected output. Do remember it's the expected output, not the actual output. Now our expected output is what we put into the process minus what we expect to lose. In other words, our normal loss. So we do expect to get 900 kilos from this process, and that's what we will divide by. And that gives us £15.80 a kilo. So we now know that our output is valued at £15.80 a kilo. Our abnormal loss is valued at £15.80 a kilo. If there was an abnormal gain, that would also be valued at £15.80 a kilo. So we'll work out our valuations. So what we're valuing is our output, which is 880 kilos, valuing it at £15.80 a kilo, comes to 13,904. Our normal loss we have already valued. We valued it at £8. And our abnormal loss we value at £15.80. So you'll notice that what we're valuing is basically everything that is on the right hand side of our physical flow. So we have valued the 800 kilos, we've valued the 100 and we've valued the 20. We've now got all the information that we need to write up our process account. So here's our process account. We've got a column for kilos and a column for value. So the debit side, remember this is the debit side, is what we put into the process account. So in terms of quantity, that is what is on the left-hand side of the equal sign. So there's our 1,000 kilos. On the right-hand side of the process account, we're going to put our output, our normal loss, and our abnormal loss. So if we just put those in first. So 1,000 kilos, and output 880, and normal loss, I'm just going to abbreviate to NL, 100, and abnormal loss 20. And we input 1,000 kilos of material. So we can see our kilos add up to 1,000 kilos on the left hand or the debit side, and they also add up to 1,000 kilos on the credit side. Now we need to put in the values. Well, for the credit side, we've already done the workings. What did we value our output at? 13,904. We valued our normal loss at 800, and we valued our normal loss at 316. So we're just transferring these figures into the credit side of the process account. And if we add that up, it comes to 15,020. So looking at the debit side, the 1,000 kilos of material that went into the process, we know were valued at £10,000. And then we also put labour and overheads into the process, which we were told were £5,020, totalling 15,020. So our process account is all balanced. Debit side 1,000 kilos, credit side 1,000 kilos, and in terms of value, on the debit side 15,020, and on the credit side 15,020. So that's the actual process account itself drawn up. So by having completed the workings and our valuations, these figures up here, right, the process account itself is quite straightforward. It's just transferring these figures into the process account. And if we look at the cost per unit calculation, you'll see the 15,020, which was our process costs, is what also appears in the process account. So strongly recommend that you tackle these questions in this order. Your physical flow, then your cost per unit, then value everything that's in your physical flow, your output, your normal loss, your abnormal loss, or abnormal gain if there was one. So everything that's on the right hand side of that equal sign, value them, and finally transfer your figures into your process account. Now, What you will know is that the process account is a T account, and as such there should be double entry. So every entry that is in the process account, there will be a corresponding entry in another account. The only accounts that you need to worry about with regard to double entry is the losses. So if we look at the process account, on the credit side we have a normal loss. So we need to complete the double entry. So there needs to be a debit entry. We have a normal loss account. So here's our normal loss account. We complete a debit entry in this, because remember we're completing the double entry. So on the process account it's been recorded on the credit side. So on the normal loss we put the same figures on the debit side. We do the same with the abnormal loss. In the process account it is on the credit side. So we draw up an abnormal loss account and we debit it. 20 kilos, which is this 20 kilos here. 316, which is 316 here. So you can see the double entry. Credit, debit. Now there are some further entries that go into these accounts. The normal loss and the abnormal loss accounts are referred to as subsidiary accounts. See there, produce the subsidiary accounts. So we've produced these accounts, but they're not completely finished. With the normal loss, what we're saying is we have 100 kilos that came out of the process. We expected it to come out of the process. It's not our actual product, but we can sell it for scrap, and we can sell it for £8 a kilo, hence the £800. So eventually you will sell it. You'll receive £800 cash. Cash, as you know, goes into either your cash account or your bank account. So let's say we put it into the bank. So you would have debited the bank account with £800, and the credit entry for that goes to your normal loss. So you can write cash or bank, whichever one you prefer, £800. And you've sold 100 kilos. So now our normal loss account is finished. No balance. Everything totaled off. Now we were told that we can sell all of our losses. So in addition to the 100 kilos we expected to lose, we did lose another 20 kilos. So this can also be sold for scrap. If you think about our chocolate example, so we expected to get 100 kilos of misshapen chocolates, but for some reason we got an extra 20 kilos of misshapen chocolates that we didn't expect. But it's still misshapen chocolates, and we know we can sell them for £8. So on our abnormal loss account, this 20 kilos that we lost, we can also sell for £8. Okay, 20 kilos, sell it for £8, means that we can get £160. Now you will notice we haven't yet cleared off our abnormal loss account. There is a balance because we've got 316 on the debit side and we have 160 on the credit side. The balance gets transferred to your profit and loss account or your income statement. So if I write to P&L or to income statement, and whichever one you prefer. So the balance is 156. So now that's our abnormal loss account completed. So that's the whole single process example complete. So if I can just do a quick recap of the stages. So always make number 1 your physical flow. Sort out what has happened with the quantities. Then use your formulae to get a cost per unit. With that formula, you can value everything that is on the right-hand side of the equal sign. Okay, so we're valuing our output, normal loss, abnormal loss. Bear in mind, normal loss, 2 possible valuations, 0 or scrap value. And once you've done steps 1 to 3, it's just then a matter of writing up your process accounts. And at this point, you've done all the hard work. You've completed your calculations, and it's just a matter of putting the figures into the correct places in your process account. If you are asked to complete the subsidiary accounts, then that means showing the double entry to the normal loss account, to the abnormal loss account, or to the abnormal gain. So that completes this recording. You will need to put this into practice, and it should become a little bit more straightforward after you've completed a few questions. So good luck with those, and when you're happy with single process costing, you need to look at the next recording, which is multiple process costing.